Hey everyone, welcome back to the channel. If you're in real estate investing or just keeping an eye on the economy, then you've likely heard about the recent tariffs that have been implemented by the US and responded to by Canada. This US and Canada trade war will have a large effect on many key industries in Canada. But what does that mean for Canadian real estate? Will it create higher home prices, a slowdown in sales, or maybe even a crash? Well, in today's video, we're going to break it down for you. But first, let's roll the intro. So what exactly is a tariff? A tariff is essentially a tax on imports or exports between two countries. And right now, Canada and the US are hitting each other with them. This all started when the US imposed a 25% tariff on Canadian imports, including steel and aluminum, a key sector in Canada's economy. In response, Canada fired back with its own tariffs by putting a 25% tariff on $155 billion of imports over the coming weeks. In general, tariffs make everything more expensive because companies pass those extra costs onto us as the consumers. So how does this connect to real estate? Well, if you're buying a home, flipping a property, or investing in new builds, you might feel some of the direct effects. The current tariffs will affect many of the construction materials. With steel and aluminum tariffs, it will create higher costs for beams, framing, and windows. Lumber tariffs will have the effect of increasing prices for flooring, cabinets, and furniture. And other construction material tariffs will make renovations and new builds more expensive. Canadian builders are already struggling with labor shortages and supply chain delays, and the tariffs are going to make it even worse. Unfortunately, all the extra costs will ultimately fall onto the home buyers. New builds will cost more, pushing buyers into the resale market. Fewer homes will get built, worsening Canada's housing shortage, and there will be higher costs for investors and flippers, squeezing profit margins. These tariffs won't only have a direct effect on construction costs, they will also have the potential to drive inflation. Inflation happens when the price of goods and services rises across the board. With tariffs on food, household goods, and construction materials, Canadians will be paying more for everything, which means the average Canadian will have less disposable income for mortgages and home purchases. With a higher cost of living, fewer buyers will be able to enter the housing market. It will create more pressure on mortgage affordability, potentially increasing defaults, and if inflation were to rise fast enough, it may potentially cause the Bank of Canada to increase interest rates in order to slow down the inflation, leading to tougher borrowing conditions, pushing more people out of home ownership and into renting. I just want to quickly interrupt this video to remind you that this year I have the goal of reaching 5,000 subscribers on my channel and becoming a go-to real estate resource. So if you're watching this video and haven't yet subscribed to my channel, please take a second to show some support and like this video, subscribe to the channel, and turn on the post notifications. Your support means a lot and it goes a long way. Now, back to the video. Now, ultimately, do I think it will cause a real estate crash? Likely not, but it does have the potential to shift the market. If the trade war continues over the next year, we could see higher priced homes since new builds will cost more due to rising material costs. It could also lead to slower home sales if inflation and interest rates rise and more people decide to become renters as homeownership becomes harder. So what's the move if you're in real estate? Although this may not be an ideal situation for buyers in the market, for real estate investors, this could actually be a huge opportunity. If people can't afford to buy, they still need somewhere to live. That means the rental market could boom with higher demand and increasing rents. So if you're investing in rental properties, you might be in a strong position. If you're a home buyer, I would suggest locking in a mortgage rate now before costs go even higher. And finally, if you're a homeowner, I would watch the market closely as prices could fluctuate based on supply chain issues. That does it for this week's video, and now I want to hear from you. Do you think these tariffs will slow down the real estate market, or is it just a temporary bump? Drop a comment below and let me know. If ever you're thinking of buying or selling a property in Montreal or its surrounding areas and have any questions, send me a message or an email and I'll be happy to help. You can find my contact information in the drop-down menu right below this video. That's it for this week's video. Don't forget to like, comment, subscribe, and turn on the bell notifications for more content like this, and I'll catch you next week.